at USC, and he was a running back. You know who was behind him? In front of him was a guy named O.J. Simpson. And Bill, I think you went to the Atlanta Falcons for a year. Yeah. Okay, so we're going to get started. So everybody's muted. So welcome to the Kushner Report for the second quarter of 2025. And as I said earlier, we're going to do this on a quarterly basis. So at the end of today's presentation, we're going to open up for Q&A and a lot of things to discuss today. I have a lot of information, a lot of data. So today, what we're going to do, the agenda is we're going to look at the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, which we have a lot of activity, and then other significant economic news. And today I'm going to address the semiconductor and manufacturing outlooks for 2025. So let's take a look at the semiconductor business in terms of where we are today. So if we look at the industry, the semiconductor industry is really poised for a transitional period in 2025. We're looking at emerging technologies like artificial intelligence, hyperscale cloud computing, and autonomous vehicles are really driving unprecedented demand across the industry and advanced chips and memory solutions. And these dynamics really reflect a pivotal moment for the industry. And on one hand, we have opportunities abound for innovation in high performance computing, AI accelerators, and any efficiency designs. However, the legacy systems and markets face a slowing growth, and oversupply risks also loom in the traditional memory markets. So the semiconductor industry promises to be very challenging in 2025. So what I'd like to do now is take a look at some of the growth drivers that we see in 2025. So, of course, number one is artificial intelligence and its undisputed engine for growth for the semiconductor sector that really influences everything from high performance computing to edge devices. We have high bandwidth memory also has emerged as a critical component for these systems. And unlike traditional memory solutions, high bandwidth memory provides the immense data throughput needed for all AI workloads and drastically reduces latency and improves computational efficiency, which is good in all industries. Now, with revenue expected to go out at $21 billion this year in AI, this represents a 70% increase from the prior year. And AI's influence extends beyond just the data centers. We're looking at edge AI applications such as we look at smart sensors and autonomous devices, and they're also driving demand for compact energy efficient chips that deliver real-time processing. And the semiconductor companies are really investing heavily in R&D this year to meet diverse requirements. The rapid expansion of hyperscale data centers is another key driver of the industry. With global reliance now on cloud services increasing, the infrastructure supporting these platforms requires constant innovation. The key here is energy efficiency, and it's become a top priority in cloud infrastructure development. And the data centers consume vast amounts of electricity, and reducing this consumption is both a cost savings measure and sustainability imperative. The focus again is on efficiency, and it's reshaping the competitive landscape among all the chip makers. When we look at AI and cloud computing, we're looking at the interdependent focuses and forces that really magnify each other's impact. AI workloads require the scalability and computational power of the cloud, while cloud platforms increasingly depend on AI to really enhance services and optimize operations. While the spotlight is on cutting edge advancements, keep in mind legacy and consumer electronics markets remain the vital pillars of the semiconductor industry. And of course, the automotive, and you look at the automotive industry, it continues to demand high reliability components, including power management ICs, sensors, and connectivity modules. And this is because growth of electric and autonomous vehicles is a real demand these days. Industrial markets, heavily reliant on material semiconductor technologies, really faces a challenge as fabs prioritize advanced chips like AI accelerators and high bandwidth memory. In the area of consumer electronics, the market is grappling with saturation, as you know, particularly with smartphones and PCs and other personal kinds of devices. when we look at memory technologies like DRAM and NAND, they're really facing oversupply risks. And in 2025, the legacy and consumer electronics segments will require careful navigation, really, to sustain relevance amid the semiconductor industry's rapid evolution. And the semiconductor supply chain has really faced turbulent years in the recent past. And in 2025, expect that trend to continue. We're also seeing a balancing act between oversupply and undersupply across various segments of the market. And that'll be a key test for manufacturers and suppliers going forward. And the rapid growth of artificial intelligence and high performance computing is really driving fabs to prioritize advanced AI accelerator chips and high bandwidth memory. And in certain segments like traditional memory markets may face oversupply. As demand shifts towards cutting edge memory technologies, AI and cloud applications are really the key drivers. We have economic cycles are adding another layer of complexity to the semiconductor industry outlook for 2025. Cyclical demand fluctuations, in particularly in the industrial and automotive markets, really could lead to what I would call alternative periods of inventory shortages and excess. So if you're taking your car in, for example, you may find out it's taking longer to get a part or a component because of the backlog in terms of where it's coming from. You also need to look at strategy. And here to navigate these dynamics, the industry companies need to embrace strategic supply chain management tactics. They need to look at diversifying production priorities, improving production quality and collaboration, and also looking at investment flexibility. Flexibility. So in 2025, the test is going to be on adaptability and semiconductor supply chains. When you look at the semiconductor industry, it's set to be transformative in 2025. Innovations in AI that we've seen over the last 2 to 3 years, cloud computing, advanced memory technologies are really driving unprecedented growth and reshaping priorities for all manufacturers. And there are headwinds in the semiconductor companies to adapt to a dual focus. Again, keep in mind it's sustaining growth in high performance segments while stabilizing traditional markets and the traditional marketplace. So supply chain management will be and play a vital role in balancing act. So companies have to embrace strategic planning, leveraging flexible production and systems and enhancing forecasting to manage both oversupply and undersupply risks. The one thing I want to mention here is that we're building about 15 fabs across the United States in Nevada and Arizona, Utah, and also back east in the Ohio area. One of the things that we're dealing with right now is we can't find workers that are qualified to work in these factories. So what they're doing right now, they're bringing a lot of people in from Taiwan and other countries to get the semiconductor businesses up and running while we start training people in this country to work in these industries. And these are going to be very good jobs and they're high paying jobs. So there's a transition going forward in terms of what we have to do with the demand in the semiconductor business. So that kind of gives you a thumbnail sketch about what's happening in the semiconductor business. It's an exciting area. I mean, there's people that have spent their whole career in it, but there's tremendous upside opportunity across the board. And AI, of course, is linked to everything, whether it's biotechnology or semiconductors, etc. Now let's take a look at the manufacturing outlook. So in 2025, manufacturers will continue to face a challenging and uncertain marketplace due primarily to a combination of higher costs, potential policy changes following the US and global elections, and of course, geopolitical uncertainty. Changes to trade policy and tariffs, of course, could drive up material costs and component costs, and also could have a ripple effect throughout the supply chain. When we look at the labor market tightness in the manufacturing industry, it's been declining since 2024. And now weakening demand for manufactured goods and labor market loosening seems to have created a better balance, at least in the near term, between labor supply and demand in manufacturing. But labor participation rates continue to decline in the United States for over the last 2 decades. And this is due in part to an aging population. And this may continue through, and they're talking about till 2030. Again, manufacturers have really already made significant investments in AI and generative AI across the board. And this trend is expected to continue throughout 2025 and beyond. Manufacturers stated that problems with data, including data quality and validation, are really causing some significant obstacles to successful AI implementations. So improved efficiency and productivity and cost reduction are clearly significant benefits to be achieved through generative AI implementations. And experts believe that AI and machine learning will have the largest impact on business outcomes relative to other smart manufacturing technologies. When we look at supply chain disruptions, the concerns here are shipping delays, labor challenges throughout the value chain. We're looking at rising input costs. At the same time, you have the impact of government policy changes in 2025. When we look at smart operations, we're looking at manufacturers continue to invest in digital technologies as seen over the last several years, despite economic uncertainty of rising costs and a challenging business climate. Production line integration also should help eliminate bottlenecks and optimize the workflow before any physical changes are made. So keep in mind the ability here to overcome interoperability changes and challenges between new and raw materials and legacy systems are a priority, including cybersecurity and data protection, which are really key components. And in 2024, we saw the deceleration in clean technology investments. However, we believe that in 2025, the trend will be toward investments. Now, we also expect to see the possibility of more regulatory changes following the US elections, and companies may, in some cases, may employ a wait and see approach in 2025. The key here is going to be rate cuts will fuel increased investments and business spending, as we've seen in the area of clean technology products. So a lot of that will take place going forward. The demand for technologies is driven really in part by what we call a green premium, and some customers are willing to pay in addition to regulatory requirements for emissions. However, in 2025, we're going to see where companies may pass these costs on to customers, which could, in many cases, make a green premium even more difficult for companies to justify. So in 2025, the manufacturing industry is likely to face similar challenges that we've seen over the last 4 years. But we see advanced talent planning and management tools that can really escalate and support skill-based approach, which would lead to employee retentions and could also help in the workforce expansion going forward. So the incorporation of AI fundamentally and smart operations techniques such as workforce training, keep that in mind, workforce training will be essential going forward. So that kind of gives you a kind of a quick update on what's happening in the manufacturing sector. So now I'd like to move into the main body of the presentation. So we're going to take a look at key economic indicators, inflation, unemployment at the federal and the California level, and also the price per barrel of oil. So if we look at the global economy right now, it's projected to go out about 2.7% this year and then dropping down to 2.4% next year. Our economy is projected to go out around 1.4%. We'll deal more with that later in the presentation, and then going up to about 1.9% next year. Inflation for both 25 and 26 is still running around 3%, give or take a little bit. So we're still seeing that happening. A lot of that has to do with interest rates and inflation and also the implications of the tariffs, which we haven't seen the full implications yet. When we look at unemployment across the country, both this year and next year, at a macro level, we're looking at 4.3% on a national basis. Now, California, which is falling further behind, leads the nation at 5.4%, and then hopefully dropping down to 3.9% sometime next year. Now, the price per barrel of oil in the range is between $70 and $75 a barrel. The last time we had a presentation, we were running around $60, $61 a barrel. Well, oil closed yesterday at $70.17, so it's gone up almost $10 a barrel since the last time we had a presentation. So we're seeing a lot of this bouncing around now. Let's take a look at the global economy. The good news here is that most of the banks, such as the Bank of Australia, is holding ranks steady. We're seeing that happening at around 3.85%. The Bank of New Zealand is holding their rate steady at 3.25%. And the Bank of Canada cut their rate recently by 25 basis points. However, in Brazil, which is a real problem area, their central bank rose their rate by 100 basis points to 14.25%. So you can see their economy is really struggling. The Bank of Japan is continuing to keep rates steady at this point, so they're staying flat and not making any changes. We look at the European Central Bank. Recently, they dropped their rates by 25 basis points down to 2.25%. And in England, they brought their rate down as well to 4.25%. Now, you look at the Chinese economy, and the Chinese released a wide range of economic data recently, offering really a mixed bag of picture in terms of the momentum heading into the second half of the year. Their economy in general is down substantially. There's still a lot of concern about the real estate market within China, and there's some other variables that we don't have data on at this point, but their economy is still very soft at this point going forward. Now we look at California. California has now overtaken Japan as the fourth largest economy in the world. So this is amazing. So, I mean, we're like a separate country. Now, the US GDP in the first quarter went down around 3/10 of a point in the first quarter. Last night, they said that the second quarter, right now, it's not firm yet, but the second quarter looks to be 3%, which is a major jump in the second quarter. So we'll see how that turns out when it's finalized over the next couple of months, and then we'll see what takes place the second half of the year. When we look at the tariff implications for the U.S. economy, as you know, every day we're hearing about tariffs, and the navigation and the going back and forth every day is continue on. I mean, we saw some changes taking place with Europe recently, also some comments on the on South Korea. So if you go back over the last year and a half when I've been doing these presentations, we're running sometimes over $90 billion a month as a trade deficit. Okay, and you're talking about over $1 trillion a year. And that's got to be brought down substantially to level the playing field. And the two biggest problems we have of the $1 trillion a year is China and Mexico specifically. So we're trying to kind of rein that in all to level the playing field. And I think going forward, we'll have to see what happens. There's too many unknowns right now about the tariffs. And we're going to see that continue on for the rest of the year. Could it go into next year? We just don't know what's going to happen. But I mean, the negotiations continue to move on, and we'll see. Hopefully, it'll work out down the road. The real concern I see here is this, it's credit card debt. And you know, people are living off their credit cards and the consumer continues to spend. So if credit card debt continues, it's over $1 trillion every month, which is substantial. And you know, it's a real problem. At some point in time, that's gonna come back and have a negative impact on the consumer. So let's take a look at inflation. Last month, inflation rose to 2.7% from earlier in February, and we've seen that happen. So in the area of core inflation, and which it strips out volatile food, if you will, and energy prices, and is really seen as a kind of a reliable gauge of the underscoring of the price pressures that are taking place. Those costs went up by 2.9%, just under 3%. So there's still inflation movement in that area. And that's one reason why the Federal Reserve is holding on dropping rates, as they said yesterday, they're going to hold everything in place. We could see a rate change later in the year. We don't know. Right now, they're not everything is on hold, so we're not seeing a rate change at all. When we look at the wholesale index, we saw an increase there, went up by 2.3% during the month. And you know what that is? That's the price that the manufacturers charge to the end user, like Albertsons or whoever. So that those prices continue to rise. There's still concerns about that in the area going forward. Look at retail sales, much better in June than expected. We saw an increase of 0.6 of a point. The real driver here was the automobile industry. We saw an increase of 1.2% in general, which really lifted the retail sales component. And we saw some up in the area of building materials and garden supplies. Of course, bars and restaurants, we saw an increase as well, and some increase in e-commerce. So those are small indicators going up, but they're still very positive. Now let's take a look at the job market. So what's taking place in the employment marketplace? So across the board in June, we saw an increase of 147,000 jobs in June. However, the unemployment rate increased to 4.4%. The thing you want to take a look at here is business and professional services, the manufacturing area again, mining, which is a small area, and then wholesale and trade all had negative growth figures. So again, we had 147,000 jobs. You go back several months ago, we were between 250, 300,000 jobs per month. So the employment picture continues to contract. Then you take a look at California. This is kind of, you see where it is here. This is a very, very low level of 6,100 jobs in June. And we saw the unemployment rate go up to 5.4%. In key segments here, you look at administration, information services, manufacturing, and of course, wholesale. and transportation all had negative growth, and those are key areas of jobs. So we saw that taking place. So that's kind of where the California economy is. Like I said, we have the highest unemployment rate in the United States at this point. I mentioned interest rates. Again, Federal Open Market Committee said last night they're going to hold rates the same right now. So we're looking to range between 4.25 to 4.50 for the time being. So that we don't see that changing at all. When we look at the mortgage rates, they're holding steady at 6.75%. It's been that way, close to that number for the last 2 to 3 months. So it's staying relatively flat. And we're not sure where that's going to go going forward, but that will have some implications I'll talk about in a moment in the housing market. Now, the manufacturing update here, the biggest concern I see here is that this is the fourth month in a row we've seen a contraction. We've talked about manufacturing in the past, and the real underlying number here is the 50 basis points is really key. Anything over that means we're growing in manufacturing. And unfortunately, we're still 49 and below. So we're in a contracted mode here. So we're seeing manufacturing across the country shrinking. And that's a real concern in terms of jobs being lost, et cetera. So we're in a negative phase right now. Hopefully that'll start turning around. Especially has a lot to do with the tariffs and everything else. There's a lot of stuff on hold right now. When we look at small business confidence level, dropped again below the 100 mark. It's still down a little bit right now. We'll have to wait and see what takes place. Good news that came out yesterday, and I'll talk about it the next time we get together. It just moved up a little bit over the 100 mark. So there's some more confidence happening right now about what people are seeing. In the area of consumer confidence, again, it dropped by 5.4 points. It's now running around 93, again below the 100 basis points. Crude oil prices went up. We did this thing in June. When I looked at it in June, it was running at $60.41. Last night it closed at $70.16 a barrel. So we're talking about almost $10 a barrel raise in the last almost a month and a half, 2 months. So we're seeing the price going up. So the $70 to $75 range is still a viable alternative at this point. So we'll see what happens going forward. Now let's take a look at the housing market. So we look at housing starts. The good news here, housing starts were up 4.6% in June, and they increased permits for new housing was up by 0.2 of a point. So this is very good upside indicators for the market. In the area of new home sales in July, and Henry's not on board, they were up by 0.6 of a point in June, which is good. It was modest growth, but it's still moving in the right direction. Let's take a look at Southern California, where most of us on the call are from Southern California. In LA County, the median home price is around just under about $904,000. That's an increase of 8.2%. But however, sales were down 5.4% from May. And then we're looking at it went up about 1.1% over June of 2024. So again, sales were down in the month. When we look at Orange County, which is a bellwether here, the rate of 1,470.5 increased by 3.6% during the month of June, but sales were down by 1.2%. However, sales were up about 1% from June of 2024. So the housing market in Orange County is still pretty solid. When we look at San Diego County, where I reside, the median price was down shortly, would drop by 2.4% to $1,025,000. And then we saw that sales decreased by 3.9% in June and increased about 0.7 of a point from June of 2024. What's interesting here is that existing home sales continue to weigh on the economy for the housing market. The high interest rates remain significant, uh, constraint to first-time buyers, etc. And we saw the overall rate again fell by 2.7%. So the last 3 months in a row, we've seen a continual decline in existing homes. Now, there are pockets in the United States where we've seen prices dropping anywhere from 15 to 25% to move inventory, okay, in different states. It just depends. I mean, there's issues in several states in the western part of the country, like in Arizona and in Nevada, where there's some concerns on pricing as well. The productivity index for the first quarter was down by 0.8 of a point. I won't have any data on the second half, and probably until we have our next session. So now I'd like to take a look at the companies that have employee displacements. Now we're looking at the last quarter, so the last 3 months. So we've seen some significant changes taking place. So first of all, of significance, Intel eliminated 20,000 positions. And we saw John Hopkins eliminated 1,975 positions. UPS 20,000. I'll talk more about that later. We saw Panasonic within the United States and globally 10,000. Microsoft overall in the last 3 months 19,000. We saw Nissan globally, including the United States, 20,000. Booz Allen 2,500. IT and Walmart down 1,400. Procter and Gamble 7,000. And we had Dahmer Trucking was down by 5,000. Tyson Foods 5,000. And then what's interesting here is Indeed and Glassdoor, for those of us that use these sectors, they eliminated 1,300 positions. So you can see where they are. I know, and I've got 30 or 40 other companies, but I'm not going to mention them, and other organizations within the government that had cuts as well. So now I'd like to take a look at the M&A marketplace. Lots of activity going on, a lot of consolidation taking place in different vertical markets such as biotech, etc., and also in the energy sector. So first of all, Vitamin Shop, which is a major player in the marketplace, has been sold to a private equity firm called Kingswood Capital Management and Performance, and for $195 million, and they're going to take that entity private. Now, one thing we did see is Capital One has now merged with the Discover Card, and that's where it's an all stock transition. It's $35.3 billion. It's a huge, huge deal. And then Valero is a California-based oil refinery, which is located in Northern California. And what they're going to do, due to California regulations, they're closing the refinery in April of 2026. And the problem you have here is they produce 149,000 barrels of oil a day. So the impact is this: Valero accounts for 14% of California's oil. So that's an issue right now. So we're going to have to figure out how do we make that up. And of course, if you're in California, you're going to see the price of gasoline rise. UPS is acquiring Idalor Health Group for $1.6 billion. Again, there's another healthcare acquisition. Columbia Banking is acquiring Pacific Premier, and that's it's an Orange County group, and Columbian banking system is in the state of Washington. So that deal is worth $2 billion. Skechers, for all of you, including me, that buy shoes there, they've been publicly traded for a long time. They're just being acquired by 3G Capital, and they're going to take the company private. Novartis, which is a major player in the biotech space, is buying a company called Regulus Therapeutics. Here it's looking at increasing their business in the renal area of renal failure, and they're moving in that area. So that's a $1.7 billion transaction. Take a look at Merck. They've been active 2 or 3 times this year. They're acquiring a biotech SpringWorks for $3.9 billion. And in this case, it involves presence in expanding their cancer drug process. So they're moving in that direction. Then a private equity firm called Stonepeak is acquiring Radiology Network. They're in the final stages of this thing taking place, and that deal is worth $1.9 billion. Then OpenAI is buying Windorf for $3 billion. Again, this is a small company. They're involved with artificial intelligence assisted in the area of coding. So that's a big transaction that's a $3 billion deal. Then Sunco in the oil and energy business is buying Canadian gas company convenience chain called Parkland for $9.1 billion. And they'll continue. This is a big footprint moving into Canada. Now, Charter Communications, for those of you in Orange County, is buying Cox Cable for $34.9 billion. And now what's going to take place is now Cox Cable and Charter Communications will be the second largest cable company in the United States after Cox, which is in the Bay Area. So that's a major transaction, and that deal should close possibly by the end of the year. For those of you familiar with Dick's Sporting Goods, they're acquiring Foot Locker that's been around for a long time. The idea here is to expand their business into the international marketplace. And then, of course, you have AMD is selling off ZT Systems business to Sanmina. They're moving out of that particular segment of the business. The deal highlights AMD's efforts to produce more of its chips in the United States, and of course concerns about global trade issues taking place. So that's a strategy that AMD is moving on in this point. Now, Sanofi, which is a French company, has agreed to buy the U.S.-based Blueprint Medicines Corporation for $9.5 billion. and that's a boost in the position in what they call rare immunology diseases. That's another major transaction. Then Bain Capital is buying multi-brand mega franchise called Sizzling Platter for 500 million that involves 750 restaurants. One of them, for example, you filmed the one is called Little Caesars. So combination going over in that particular retail space. Qualcomm is active again. They're buying a company called Alphaware Semi for $2.4 billion. Um, Alphaware Semi is really a global leader in high-speed wired connectivity and compute technologies, basically delivering IP and custom silicon and connectivity products as well as chiplets. And then Brown and Brown is buying a company called Risk Management Group for $8.5 billion. It'll strengthen their consulting practice substantially. Eaton is active again in the aerospace business. They're buying Ultras PCs for $1.6 billion going forward. Again, you're seeing some minor acquisitions taking place in that particular space of aerospace. Now, Chart Industries and FlowerServe are combining to become an enterprise worth $19 billion. So you're seeing some consolidations taking place in the marketplace. Those are familiar with Home Depot. They're buying GMS Retailer for 3.4 billion. The idea is that the retailer is moving to draw more sales from contractors and other home professionals as they expand their business in the marketplace. Then we have CoreWeave is acquiring Core Scientific for a $19 billion. It's going to be an all-stock transaction. This has to do with data center infrastructure providing. And then Farr Rocher is acquiring W. Kellogg, if you're familiar with, for $3.1 billion. The owner of the Italian company is in a deal. It's worth 3.1, as I said earlier. The names are some of the most well-known around the world in that consumer business marketplace. And then what took place yesterday, and I wanted to report on this, is Union Pacific and Norfolk Southern have reached a deal. They're going to merge for $85 billion. And it'll be called Union Pacific. And the whole thing here is the network wants to streamline and improve supply chain management and improve overall operating efficiency in the rail system in the United States. So this is a big, big transaction. And that could have a lot of positive impacts going forward when they can figure out a way to reduce operating costs and improve operating efficiency and really getting products to market in a much quicker fashion. So you see a lot of activity took place in M&A last quarter, and transactions just continue. So what else is taking place? Well, those of you familiar with Sam's Club again is owned by Walmart, and what they decided to do is change their business model. And because of artificial intelligence, the retailer plans to phase out traditional checkouts across its 600 stores and create what they call a friction-free shopping experience. So the technology basically would eliminate the need for receipt checks at the door. So this will be interesting to see how that works. Jack in the Boxes is located in San Diego. Announced that they're closing 200 of their stores, which is about 10% of the locations across the country. And also, they're putting up for sale Del Taco amid overall restructuring of the company. The chain has been around for 74 years old, and it plans to close between 150 and 200 stores and those are considered underperforming locations. Now, for those that have Verizon, over the last few months, Verizon has lost 300,000 customers. A lot of this is being strategies with T-Mobile and AT&T. Again, there's a lot of shifting going on in pricing and et cetera. But right now, Verizon has lost 300,000 customers over the last few months. And then we look at Subaru, and they've decided the car production company is moving out of the United States to avoid more issues with the U.S. and Canadian trade wars, which is unfortunate. When we look at IBM, which is a bellwether company, they pledged $150 billion to boost growth in computer manufacturing. And they're going to spend $30 billion in the United States to build their mainframes and their quantum computers going forward. So they're going to invest in a lot of this manufacturing type of products. Keep in mind, IBM started doing manufacturing 114 years ago, and they're still around, they're still strong. Rite Aid again has declared bankruptcy, and this time they're seeking a sale. I'll talk a little bit more about that later, but right now they're pursuing sales, and it's not certain how long the Rite Aid stores will be open. Some of these will be sold, and I'll talk about that in a couple minutes. Then on the next slide, we have world. It's called world's second largest car making and manufacturing of luxury cars. So Volkswagen Group has announced they're the second largest car manufacturer in the world. They'll be joining a number of other car manufacturing companies, and they're moving production to the United States. And that's what they're doing with luxury brown cars, Audi, and so forth. They want to build more cars here and have a better chance to be able to sell cars without having to pay high premiums. And then CVS, as I mentioned earlier, is in the process right now of buying 625 stores strategically from from Rite Aid as that whole thing goes forward. Now, for those of you that use hair products called John Paul Mitchell, been using them for years. The decision has been made. They're leaving the state of California. They're moving to Texas. It's a $12 million company, but that will move 80 jobs to the state of Texas. Another company leaving California. Now, for those of you familiar with Del Monte Foods, after 138 years, Del Monte has filed bankruptcy. They're involved in canned fruits and vegetables. Right now, they've been able to secure about $913 million in new funding to keep the company afloat while they restructure the business and sell off some of the components. And theoretically, the liabilities are somewhere between $1 and $10 billion. So that's unfortunate. Then an In-N-Out Burger has announced last week they're moving out of California. They're moving to Franklin, Tennessee. And right now, there's 500 people affected. Some of those people will go to Baldwin Park to work, and the others will have to relocate to Tennessee. So again, you're seeing a few more of those companies kind of leaving the area. So a lot of activity taking place around the country, around the world. So what I'd like to do now is open it up for Q&A. These are some of the sponsors that we give credits to for participating in the program. So we're going to unmute everybody and open it up for Q&A.